Hello everyone and welcome to my daily report morning videos with me, Richard Perry, market analyst at Hantec, on Wednesday the 1st of May. 1st of May, Labour Day or May Day, wherever you are in the world, and it's a whole swathe of public holidays. So we're going to see reduced volumes and reduced liquidity, I think, in these markets today. So be prepared for that. However, UK and US markets are open, and we've had some data out this morning. But before I get into that, the general outlook on across markets is mildly positive, and that's come as a suggestion from the trade talks between US and China that they're sort of moving towards a deal. Could take a couple of weeks, and it's possible that they could be close to signing a deal at some stage in the next sort of month or so. So that's a positive. Taken as a mild positive for risk appetite, you've seen equity markets higher. S&P 500 closed slightly higher, but look at the futures, plus 0.4%, so that's a positive there. And we're seeing FTSE 100 higher. DAX and CAC are closed for May Day public holiday. So in terms of data points today, we've seen UK manufacturing PMI coming out just now, 53.1. So down from 55.1 last month, but there was a significant amount of stockpiling last month in lieu of Brexit. It was meant to happen, but didn't happen. Subsequently, that's unwinding. And then looking into the afternoon, we're getting the US data. Now, we've got the ADP employment report, employment change at 115, expected to be 180,000, which is again actually where the payrolls number is meant to be on Friday. So it's interesting to see if there's a link between those two. There hasn't been previously in previous months. And then we're looking at the PMI data for the US, the ISM manufacturing PMI, which is expected to be 55.0, down from 55.3. So a very slight reduction there in the ISM number. Now, also we've got the weekly crude stocks, 1.5 million barrels expected of build, down from 5.5 build last month, so possibly have a bit of a negative impact on oil there. And then into the later afternoon, 7 o'clock tonight, you've got the Fed. The FOMC meeting for its May meeting is not a meeting where we get the economic projections or the dot plots. So it has a slightly reduced impact on the markets, but there is now this press conference that Jerome Powell is holding every meeting. So aside from the FOMC statement, we'll be looking out for how Powell comes across in the meeting. Now, the expectation is that, it'll be not expectation necessarily, but given the fact that US growth has been pretty strong in Q1, although there are caveats to that. You had consumer confidence, which was strong yesterday, retail sales strong recently, all sort of adding up to a fairly positive consumer outlook on the US economy. Given the fact that inflation is falling, that's a positive, really, for the US economy, and wages are rising. So it's fairly decent for the US consumer. There's no real need to be cutting interest rates at the moment, and how the Fed sort of puts across those views in today's statement and also Powell's press conference will be interesting, because the market at the moment is sort of focusing on possible cuts in December, rate cuts in December. 60-odd% probability. Okay, so that's all the data points today. Now, in terms of my chart of the day, I did a couple of days ago talk about the sterling Aussie, which was rallied back into this resistance of the old pivot and then falling away. But yesterday's move was sharp to the upside, and that was driven by suggestions that there may be a move towards some sort of agreement between the Conservatives and Labour, although I am fairly sceptical about this. The market did respond pretty strongly in terms of sterling, pulling cable above 130 big figure, and the sterling Aussie above this 184.60, 184 to 84.60 pivot line. Now, closing above that is a positive, and you've also got the gains today. Look at the momentum indicators, RSI, highest for 6 weeks. MACD lines crossing higher, accelerating stochastics, possibly with a bull kiss. So, is this setting up for further gains on sterling Aussie? Well, I think obviously the first port of call is holding above the support 84 to 84.60. If it can hold up above that, then I think that the market will continue to build in this recovery uptrend. Now, there's a caveat in the fact that we're hitting the resistance of the old uptrend. Having broken that to the downside, that becomes a basis of resistance, and that is basis of overhead barrier around 85.50 today. So a move above that reaction high at 86.10 from earlier in April, I think would be the confirmation that we're getting a more positive outlook for sterling, and we could start to see some sterling continued recovery. But I think that that would be the trigger, that move above 86.10. As I said, holding 184 to 84.60 I think would be a key basis of support near term. And you can see that here on the hourly chart. There's a decent line of support around 84 to 84.50 area on the hourly. You've got the 84.75 as being a basis of support in the last 24 hours or so. And you've got more positive momentum configuration. So the key reaction though is 83 figure. So with that in mind, I wish you good luck in your trading today, and I'll speak to you again later.